Welcome to the daily update, where I'll go over the action in the market for Tuesday, February 18th, and we'll see how things look for Wednesday, February 19th. Kind of a sleepy day. Growth really underperformed. The mega caps didn't have all that good of a day, but right at the close, we saw a little spike up in price, and that was enough to set a new all-time high for the S&P 500. So that's positive. We're positive when we look at moving averages. Our internal indicators that we look at are looking okay and showing some improvement. We're just not trending right now. So it's been really choppy. There seems to be a lack of conviction as we look at the last few weeks together, as the market's a little bit confused. On the other hand, the smart money indicators, which we saw the Chaikin oscillator looking kind of negative after Friday, it's now switched back to looking more positive, but we're getting really extreme readings with the smart money indicator. So they're coming in and doing buying, but we wonder if we're going to have to continue with this sideways action, because when the smart money indicators get extreme, it does not necessarily mean a reversal. It just means that things may slow down even more than they've already slowed down. All right, let's go back and talk about what happened. Right at the open, we had a higher open. Europe has been doing pretty well lately, and that carried over into the US S&P futures. But right at the open, we hit resistance at R1. That was at 61.26. And then we fell back. Fell below the daily pivot at 61.16. Notice the numbers are not very far apart from each other. That's because Friday's open, high, low, close range was not very wide. So that made the pivot points for Tuesday not very wide. And we also fell back down below the unchanged level. We actually went negative. We chopped above and below the unchanged level for most of the session, and then we broke to the downside, actually falling below S1 at 6106, but then we found support at 6100. That's a level that's psychological. It's now turning into a technical level, and we were able to bounce up off of that. We got back above S1, the unchanged level, and then we saw this last 10 minutes of late day buying, which surged prices up. And we actually went back above R1 to close at a new all-time high, but we were only up 0.24%, not a huge percentage gain. Volume did pick up though, so we were above average there. And we are positive in the short, intermediate, and long term, but we're not trending. Interest rates are back up above 4.5%. And that may have added to some of the lack of conviction in Tuesday's session. And then all the geopolitical things. Now things are turning more foreign as far as what's happening within the US with the new administration. Some statements were made over the weekend in Munich, Germany, and now they're talking about, okay, Russia, Ukraine, the US trying to work out some kind of a deal there. And of course, the people that hate Trump think this is all evil. The people that love Trump think this is all wonderful. We try to take it in a more objective manner, and the market is not really sure right now because there's so many changes that are happening so quick. And things, the ceasefire deal in Israel, that seems to have gone off without a major escalation there. But all these things can change at any given time. Okay, so some comments. We did set a new all-time high with the S&P. Mega caps and growth underperformed. It wasn't a really good day for the mega caps or growth. On a short-term basis, though, we're seeing some signs of good upward momentum, even though we're not trending right now with the Stochk RSI, the Williams Percent R, CCI 14 and 20, and stochastics. These are the ones that usually start to get extreme when we're seeing positive action. And even though we're not trending, we are seeing a bias more to the upside. And then we have our three smart money indicators, accumulation distribution, which is still getting kind of far away from that moving average. The Chaikin money flow giving us quite an extreme reading. And then the Chaikin oscillator, which had turned negative since it dropped below its moving average, even though it was still giving a high reading, it's now turned back up and giving another extreme reading there. We had the Arun. It finally kicked into gear. It's been pretty comatose for the last week or so. It just jumped in and said, "Oh, hey, maybe I better go positive, and I'll go extreme positive," and that's where it's at right now, as well as the Sean trend meter. No change to the scenario now, but on Wednesday, the Fed minutes from the meeting are going to come out. We'll see if that changes any of the scenario at all. And the dollar was up, interest rates were up. We're right back. It seems like we go from one level down to a level that we've been at before, and then back up to another level we've been at before with interest rates. We're at 4.54% with the 10-year yield, where after Friday we were under 4.5% at 4.48. Now, there's nothing magical about 4.5%. Just as I was watching things over the last month or two, when interest rates were going up and the market was doing pretty good as well, it didn't seem to matter. Well, then all of a sudden we broke above that 4.5% level, and that's when the market seemed to kind of get a little nervous about interest rates. And I've said this in other videos too. It could be 2.5%, it could be 7%. It's what relative to what's going on at that time. When does the market start to become concerned about interest rates? And it's around that 4.5% level now. Sentiment is back up to neutral with the positive close that we saw, even though most of it happened in the last 10 minutes. We're back to neutral at 49. One more tick and we get to 50. And if we go above 50, then we actually lean more positive as far as sentiment. Or after Friday, we were negative at 44. We're still not trending though, and I'll show you the charts for that. We're below 20, we're below the moving average. I've switched our bias to mixed to positive just because we're hanging in there for the time being. And momentum also, I'm keeping it mixed to positive because for the most part, we've been having more of a positive bias. But we could have something happen in Wednesday's action that's negative and just take that bias and momentum back over to the mixed or even to the negative side. The economic reports that came out, nothing really major as far as having an impact on the markets. The Empire State Manufacturing came in at 5.7. They expected it to be at -2. Last time it was at -12.6. So there was a recovery there. And the NAHB Housing Market Index came in at 42, much weaker than the 47 they had expected. And 47 is what we saw last time. So here is a chart of the New York Empire State Manufacturing, where we had a negative reading, and then now we're seeing things more positive. And then the NAHB Housing Market Index dropping down after it had been climbing, but it's still positive for the time being. Then some Isabel Net block charts, Goldman Sachs top-down S&P 500 forecasts, and these are just forecasts. Who knows if it's going to be legitimate or if we're going to hit these levels, but they're projecting that we're going to get up to 6,500 or right around 6,115 or so, actually a little bit above that now. But by the end of 2025, we'll be at 6,500, and they're also projecting that earnings will increase as well. And that justifies stock prices going up. Buybacks. This is kind of interesting. The announced buybacks, that's in blue. A lot of companies are announcing them. Okay. And then the gross buybacks, what actually happened, quite a bit less than that. So sometimes a company will come out and say, we're going to buy back a whole lot of our stock and then not do it. So, and the correlation since 2000 is 79%. Then the end of year for gold. And of course, since it's going up, they're now projecting that things are going to go up here. Their new forecast is that they're going to get to 3,100 here. Actually, look, that looks higher than 3,100 to me. Um, where previously, if uncertainty, okay, blah, 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 blah. But anyway, the takeaway from this is you see both the red line and the blue line going up for the time being. All right, then what's the exposure to equities by commodity trading advisors? They're still mostly into stocks right now. And European equity flows. Now, we've seen Europe doing well lately. You've got the German market doing quite well. And now everybody's like, oh, Germany's doing good. Let's go over there. Well, let's see how much of that move is actually left. Because when most folks realize what's already happened, they react according to that. But then a lot of the move, if not all of it, ends up being over. But we're seeing a lot of money going into Europe right now. And then earnings, we're starting to wind down with that, at least as far as the S&P is concerned. And they're projecting here that the companies are beating earnings. And now there's some manipulation that goes on here. They lowball things. They come out and say, well, this is what we think our earnings are going to be, and this is how we think things will look going forward. And then the report comes out. It's like, ah, yeah, surprise, surprise. It was better than we thought. And that quite often can give a pump to the stock price. But other times it can see a real sell off. So it's kind of on a stock by stock basis how that happens. All right, this was kind of interesting. This actually came out last week and it was put out by sentimenttrader.com that they posted on Twitter, X, whatever you want to call it. This is long term, and this is an extended period of speculative complacency. That just means the market's getting a little overconfident in itself. In the markets has markedly increased the Sharpe ratio. And that's an actual figure. It's longer term. You can see this goes back to 2015 here. The problem is that long periods of complacency, a function of price stability, are often followed by periods of instability. And so what they're pointing out here is we're possibly starting to roll over. Now, you could look at this chart and say, okay, well, we're pulling back just a little bit here, where this arrow might lead you to believe that it's a little more dramatic than what we're seeing. So this is something that I keep an eye on, but it's longer term, and we'll see it in our daily charts in the day-to-day analysis that we do before we probably see it in this chart. But we're seeing that in the VIX, where the VIX has been pretty low. It's in a lower range right now. And there's just not a lot of fear in the market, which when that means there's not a lot of fear, they translate that into complacency. And the market doesn't like that. It doesn't like to be taken for granted. Okay, then the equal weight S&P 500. And what are the estimates here for earnings? Where if you look at the estimate here with the equal weight version, here's the purple line, and they're actually coming down. That's kind of the takeaway from this, is that earnings are being projected downward. They're still positive, but they're not as robust as what they had been in the past. Okay, here's the intraday chart. Really sleepy, both Friday session and Tuesday session. And we just saw the little blip up going here into the close, which set the new all-time high. And we're up just a little bit in the initial overnight session. The futures were looking pretty good here. And now they traded even when the market was closed. So I was keeping an eye on them and they were pretty positive. But then they really came down once we were getting close to the open here in the US. And then we just saw things go back down into a pretty much sideways action. We're still positive here with the blue line above the red line. Growth is outperforming value, even though growth didn't have a really good day on Tuesday. And we're pulling back a little bit here. What we're watching is this low that we set back in late January and how we've been going, excuse me, how we've been going up. Well, we're kind of leveling off right now. So we'll keep an eye on this. We want to see this continue to go up to be more positive. And then our end of day charts, growth ended up being down where value was up. So that's where a lot of the gains came from in Tuesday's session. Growth was up less for the mid caps as well as for the small caps. So we're still just kind of chopping sideways with small cap growth to value here and kind of going with what the index is doing now, not really doing much of anything. Mid cap growth to value still looking okay, but trailing off a bit here with the ratio between growth to value. And actually ticked up just a little bit, and we're looking a little stronger here. This is more of a sustained uptrend when we look at S&P growth to value. Yeah, it kind of came down a little bit with our growth to value ratio here between these two ETFs. We were coming back up to the high end of the rainbow. Now we're falling back just a little bit. And discretionary to staples pulling back a little bit, but still looking more positive in the bigger picture. Still looking good here, even though we were down slightly with the large cap growth ETF, but we're well above the 50 period moving average. But we're not trending. This is intermediate term, and we continue to fall. We're getting down to that 9 level. We stopped trading when we dropped below 20. So this has been quite a decline here below the moving average. But we are positive because the green line's above the red line. We're a little bit concerned that the green line came down slightly. And we also seeing that here. Now we could be leveling off in the short term, but the green line's coming down just a little bit. But this could be flattening out. We're getting down into the six range here on a short-term basis. And so if we do start to go back up and actually cross above the moving average, that may suggest a new trend is developing. And right now, we would default to positive because of the green line. And we did pick up to above average with volume after we saw below average volume on Friday. Sentiment, this comes out every week. Now, we're neutral right now with the chart that I look at every day. But when you take this composite together, we're at 64.06, still over in the positive area. Now, they call it greed, I call it positive. When I start to look at this in an opposite type fashion is when we get to extreme greed or extreme fear. We tend to ride this where we see it more negative when it's fear, where they have it green. And I see it green over here where it says greed. Okay, then the euphoria meter. Yeah, everybody wants to have one of those. Coming down just a little bit, but still giving us a pretty high reading here. And then once a week, we look at the legal insider transactions here, dropping back down into the bullish area, which could help things. And there's also an insider buying ETF. This is an ETF that follows, okay, what are the insiders doing? Well, just pretty much chopping sideways for about the last year or so, not really showing much of an advantage there. We did tick up a little bit with the VIX on a closing basis, but we're still below the moving average. Also, not much of a move here with the bar chart, and a bit of a tick up with the VIX of the VIX, which is the volatility of the VIX. We're still going down as far as the momentum of the VIX, which is positive. We're still up in the red area with the skew index, which is a variation of the VIX. Market's still expecting some kind of a big move that just hasn't happened yet. And we ticked up with this fear gauge, we ticked down with this other fear gauge. So a bit of a contradiction there. We went back up just slightly with the equity put call ratio. And so we're ticking back up with the 5-day chart, but we're still going down with the 10-day chart. Not a lot of confirmation there. One thing we have been watching is the risk on to risk off ratio. This is starting to go back up. Now we're only getting back to readings we've had before. We want to see this more sustained to the upside for this to be more positive. And still right in about the middle of the band here with volatility risk premium. So not seeing anything really extreme right now that way. We're positive with the advanced decline line based on price, and we're actually looking more positive based on volume. We broke out to a new high here where we have not broken out to a new high based on price. And we're seeing an improvement with the advanced decliners over 10 days. We had dropped below zero. We're now back above zero and going up. So that's turning positive. And we're seeing an improvement here with the new highs minus the new lows, a lot more green than red, a contraction of the new lows. So we're turning back up with the 5-day chart and kind of trying to go back up here with the 10-day chart. This is the smart money indicator number one, going up above a rising moving average, but we could be far away from the moving average. And we're above zero with our advanced decline ratio, both in the short and intermediate term. This is also giving us an extreme rating, higher than what we've seen over the last year. The red line is going up, so it's positive, but we're getting kind of far up here with the histogram. And where we had been declining after Friday with the chicken oscillator, we're now going back up, but we're well above this green line, so that's an extreme reading as well. Actually saw a bit of a decline here with the vortex. It's still positive because the green line's above the red line, but the green line's coming down as the red line's going up. And this is another chart showing where volume could be leading price, where we've been just chopping sideways with the cumulative advanced decline line for the S&P based on price, but we're breaking out to a new high here based on volume. And not much of a change here, where the NYSE advanced decline line is showing a bit of improvement, but still tending to underperform the price of the S&P 500. And here's the cumulative advanced decline line for the NYSE breaking out to a new high. Also looking more solid now with our regular NYSE advanced decline line, where this other one is lagging behind. That's why I show two of these. They're calculated in a slightly different way. So we're not seeing confirmation there in the broader market. And common stock based on price looking pretty good, looking even better and breaking out to a new high based on volume. And seeing a bit of an improvement here with our advanced decline line studies. We're above the moving averages with all the indexes that we follow. And we're back above 50 now with those stocks inside the S&P above their 20 period moving average. We had dropped below 50. This is showing some improvement. And more improvement here with the 50 period moving average study, 100 period moving average study, and 200 period moving average study. And the only takeaway from this chart, really, because we did set a new all-time high, but we are above average with volume. That's the real takeaway there. So seeing a bit of an improvement with our 20, 50, and 200 period moving averages for the S&P, showing good momentum, possibly extreme positive with the Stochk RSI, the Williams percent R, the CCI 14, and the CCI 20. And our stochastics are all extreme in the short term, intermediate short term, and long short term. And that's a further subdivision of the short term time frame. Positive with the force index. The condition of the short term trend, we're still going up with the green line and the blue line, and we're above both. That's positive. And we're above the simple and exponential moving averages based on 20 periods. We're in the +2 channel with our standard deviations chart. It's when we get up to +3. That looks like usually when we're overdoing it or it's showing really solid momentum, but we're not there. We're in the +2. Balance of power coming back down after giving us an extreme positive reading, but it's still positive itself. The go no go has the darker blue bars, which are positive. We're up at the high end of our highest high value. That's positive, but the TTM squeeze continues to drift off. It doesn't really like what it's seeing here. Now, I don't treat this as a primary indicator. I know some of you do. You rely heavily on the TTM squeeze. I don't. I just use it as a confirmation indicator and I consider it a secondary indicator. But this is darker blue and going down. So that's actually negative. And we're just barely dropping back below zero with the ease of movement. So after turning positive, it's now looking a little bit more negative. Here's the Arun. It's like, okay, I'm just going to go to sleep for a while and hibernate. And then boom, oh, I woke up and I'm hungry. Let's go extreme positive here. And the S&P McClellan oscillator, which was just barely negative after Friday, it's now looking back more positive. So we're kind of chopping around and turning up here with the summation index based on price. And we're seeing it more healthy here based on volume. And we're positive with the NYSE McClellan oscillator, starting to go back up with the summation index based on price and volume, but not a lot of conviction here. We were been chopping sideways a lot lately with this. This is positive. The swirling trading oscillator, based on price and volume, are both positive, with volume outperforming price. Momentum is still positive when you look at the PMO, trying to turn back up, but still negative based on price, turning up and looking positive based on volume. Another confirmation there. So we're seeing a bit of an improvement with the PMOs that are rising. The buy signals are finally starting to turn back up, but we're still pretty much flat with the PMOs that are above zero. We are positive with the Elder's Impulse system for the S&P. We're positive with the parabolic SAR. We're positive with the intermediate term trend. We're above both the blue line and the red line, and they're going up. And we're positive because we're above the simple and exponential moving averages based on 50 periods, above all the moving averages that we have here. And the lines are all going up, so that's positive. We're still negative in the short term with the slope oscillator, but it's trying to turn back up. The MACD, though, is positive. This is more short to intermediate term. So the slope oscillator is negative but improving. We're actually turning positive with the TSI. So not a confirmation there. One is looking better but negative. The other one's improving and positive. Where the MACD, the PMO, and the PPO, those are turning back up. And we're still positive with our long-term oscillators, the TRIX and KST. We're negative but improving with the Copic curve. This is another momentum oscillator. And we tick down just a little bit with the Sean trend meter, but we're still getting an extreme reading. And we're above 50 with the money flow as well as the ultimate oscillator, even though it declined. We're above the moving average with unbalanced volume. That's positive. We're above 50 with the RSI 14 and the RSI 9. So short and intermediate term are positive. We're improving here with the bullish percent index, but we have not crossed back above the moving average yet. So this is still being counted as negative, but improving. Not much of a change here with the NYSE bullish percent index. Okay, I hit the wrong button there. And we're actually ticking up a little bit with the NASDAQ 100 bullish percent index. So that's looking more positive. And we're still looking at this long-term trend line going back to 2009. Now, we did set a new all-time high. Are we going to be able to break above that and get above this trend line, or is that still going to provide overhead resistance? But when we look at the different ways to measure the trend, we're positive with the Heikin Ashi with open candles. We're positive with the Kegi chart. We're black and pointing up. Renko chart is positive with open blocks, and we're positive with the three-line break as well. Long term, we're looking better here with our 150 and 200 period moving averages. So that's improving as well. We're positive across the board and on all time frames when we look at the different stock indexes that we follow. And we're negative across the board with bonds based on price. The dollar is negative in the short term. And the growth areas, discretionary and communication, they ended up being down. And these are where some of the mega caps reside and the Magnificent Seven. So that's why we saw kind of a muted response with the index, except for right at the end. Energy, which has been getting hammered, it ended up being the strongest sector. And then I don't know why they break this out in different ways here. But this is where the S&P set the new all-time high right at the close. We had a BPI cross above 30 with the materials, which have been really weak lately. And then the NASDAQ, well, first it got above 20,001 and then it dropped below 20,000. And then the equal weight versus weighted version of the S&P seeing an improvement, but still a bit of a disconnect here. When they're on top of each other, that's when they're performing well together. And this is kind of interesting too. We're setting a new all-time high with the S&P 500. Now, this is kind of a new twist on Dow theory, where instead of using the Dow, we use the S&P, and down at the bottom, instead of using the transports, we use the Nasdaq. Now, the S&P set an all-time high, but the Nasdaq has not. So it's positive with the S&P setting an all-time high. It's a negative divergence because it has not been confirmed by the Nasdaq. And then we break that down a little further with the equal weight version of the S&P. We're not back to an all-time high yet, where we are setting an all-time high with the QQQ equal weight. So these two charts contradict each other. The S&P is looking good here, not quite as good with the equal weight here. We're lagging behind with the NASDAQ here, but when we look at the QQQ's equal weight, we're setting new all-time highs. Kind of weird how that's working. The Dow just continues to tread sideways, and it's neutral with the Elder's Impulse system. Looking okay, we were virtually unchanged, slightly positive with the NASDAQ, and up almost a quarter of a percent, getting up to this R1 pivot point with the NASDAQ 100. And the Qs are positive with the Elder's Impulse system, and the momentum for the NASDAQ 100 is positive. Small caps, yeah, still not back up to their 50-day moving average. They were up over 0.5%, but still not really going anywhere. And we look at the Russell 2000 small caps. Now, this could be encouraging, and a lot of people follow this. We've closed just a little bit above the 50-day moving average on this chart. But we did not too long ago, back in early February, and then broke down below it. That's why I follow two different indexes for the small caps to see if they're confirming each other, and they're not yet. But we are positive with the Elder's Impulse system for the small caps. And this is encouraging too. The mid caps actually broke back above their 50-day moving average. Now, they still have a long ways to go, and they've been just treading sideways, but that's a little more positive there. And we've turned back to positive with the Elder's Impulse system for the mid caps. The Wilshire broad market measure looking pretty solid here. And the total US stock ETF also looking pretty good here. The financial sector was up, looking pretty solid that way. The FANG index ended up being down, but it set an all-time high on Friday. Amazon was down 0.89%. You had Apple virtually unchanged, but still above its 50-day moving average. Microsoft's been languishing a little bit here. It was up on Tuesday, but below its 200-day moving average. And Meta ended up declining 2.76% after setting an all-time high. Google down 0.79% underneath its 50-day moving average. Nvidia was up 0.4%, back above its 50-day moving average. And Tesla was down 0.5%, below its 50-day moving average, but still above its 200-day moving average. And Netflix declined after setting an all-time high. So you take all these mega cap stocks together, and that's why the index is really kind of going along sideways right now, and why we say growth underperformed value. We're seeing a bit of an improvement here, especially with the world stocks. That's the black line. The S&P's been going up, but the world stocks were really lagging behind, and now they're coming on with some strength. And so the short-term correlation is improving. We're still flat with the long-term correlation. Oil did bounce up, and that gave the energy sector some support. We're getting up into the 71, the high 71s now. And the dollar ended up being up, but it's still below its 50-day moving average. But the way I measure it here, we're still in an uptrend with the dollar. And we went back up above 45, which is 4.5% here with the 10-year yield. And we follow this intraday. We gapped higher, and we never did get back down to this 4.5% level. It's more positive when we drop down below it. Now we're back above it. And we dropped here with the price of the 7 to 10-year bond ETF. We're keeping an eye on this. Japanese rates just keep going up. Is this going to matter at some point? It hasn't mattered yet. What, 5.5? Is that going to do something? And if we see something happen, it might be similar to what we saw last summer when there's called a carry trade. And if interest rates go up too much, people that had been using money at basically 0% interest, they put that money into something else to earn a higher yield. Well, that could all unwind if these interest rates are continuing to go up, and that could cause panic throughout the system. We're just watching to see if that will happen. And seeing an improvement here with the Qs to S&P, not all that strong right now. Most of this is Tesla with discretionary to the S&P, and we're right on top of the moving average when we look at large cap growth versus value. So right up at the moving average, which is declining with the large caps, coming down but still above the moving average with the mid caps, and coming down below the moving average with the small caps. Not a good day for growth. So what's our outlook? We are positive, but we're not trending right now. And that's been the story for the last few weeks. We're going to get the MBA Mortgage Applications Index. We get that every week, and we're going to get housing starts and building permits, which are a forward-looking type of economic report. And then at 2 p.m. Eastern time, we're going to get the meeting minutes from the last FOMC meeting. It may not offer any surprises, but if there's one little word in there, a little phrase, or they left something out that was in there before, that could freak out the market, either in a good way or a negative way. And then we want to keep an eye on geopolitical things, talks between Ukraine, or I guess Ukraine's not necessarily involved in it. The U.S. is trying to work with Russia on maybe settling things down between Russia and Ukraine. Some statements were made over the weekend in Germany that kind of had some people upset about that. And then, of course, all the changes that are taking place in the U.S. And then confirmations are still going. There's the FBI director still needs to be finished up there. That's kind of the big one. And then we will get initial jobless claims on Thursday and then consumer sentiment on Friday. So compared to CPI, PPI, retail sales, employment, this is kind of a weaker, well, I shouldn't say that, a lesser impactful week as far as the reports coming out. But any one of these could, the market could really key off of this and break to the upside or the downside. And here's also another look at the economic calendar. Seasonality, this is across the board. For February 19th, we're positive with the Dow, neutral to positive with the S&P, and neutral to negative with the Nasdaq. So take your pick there. And here, I finally got the calendar for this, where the first part of February typically will look a little bit stronger overall, but then we follow the dashed line here, the green dashed line, where we could see some weakness going into the latter part of February. Now, we have really deviated from seasonal patterns back in 2024 and haven't really stuck to them all that much in 2025. The small caps are underperformed where they should have done well. Sometimes when we think we should go up with the S&P, we go down and vice versa. So we'll just have to see if we stick to some kind of seasonal pattern this time. And then typically going back to 1950, the second half of February tends to be weak. And the first year after an election, the post-election year, February tends to be the weakest of all the months. And here's another look at the second half of February. And then this also shows that after an election, February is not a very strong month. So what are our warning signs? And this is strange. We tick up, we tick down, and we're just not really showing any conviction. But for right now, the equity put call ratio is going up. But we could see this go down a little bit, and it could go down in tomorrow's video. We're not seeing any real sustained trends right now. The Koppel curve is improving, but still negative, and the bullish percent index is improving, but still below its moving average. And we have a pretty long list here. Our three smart money indicators are positive, but possibly looking extreme, where we have a growth to value, discretionary to staples. Didn't do great in Tuesday's session, but still holding up in the bigger picture. And the 10-day equity put call ratio is going down. Advanced decline lines looking pretty good right now. Both the S&P and NYSE McClellan oscillators and summation indexes are back to positive, and that's turning the summation indexes up. And our oscillators are improving, but we're getting kind of a mixed picture, especially in the short term. The Swindler Trading Oscillator is looking good and even looking better when you look at it based on volume. The parabolic SAR is positive, as is the Vortex. And now we look at the NASDAQ 100 and the NYSE bullish percent indexes, they are positive. Ease of movement, money flow, and ultimate oscillator are positive. And we're back to having all of our moving average studies looking positive. They're all above 50 and showed some improvement on Tuesday. And the financial sector is positive, and the momentum for the NASDAQ 100 is positive. So our conclusion, not really much to change on. We're positive. I mean, we're setting an all-time high here, but we're not trending yet. And that's what we say in the short and intermediate term, but we continue to be positive in the long term as well. Thank you. I hope you found this helpful. I hope you have a wonderful day, and I will talk to you in the next video.